I'll call to order. Ready? Okay, I'll call to order the Finance Committee meeting for Tuesday, March 5th, 6 p.m. Let the record show that all aldermen are here with the exception of Alderman Canis. Approval of the minutes. I'll make a motion. Do I have a second?
Second.
Alderman Robinson, all in favor?
Aye.
Opposed? Unfinished business, we had none at this point. Under new referrals for consideration, do we want to go right to the audit presentation first?
That's fine.
Okay.
Simon, I'm sorry. But we're gonna let Karen do your.
Oh, we're doing that, okay. So the Oates bus system.
Hi. I'm here to advise the council about the status of the Oates and what's been going on and to seek some guidance. Just as some background, I performed a timing study and cut some services on the Salamanca Oates bus run and really dialed in our mileage and our timing for the hourly rates for our third-party operator. And with that, I was able to put together a bid documentation and release it. I released that on November 8th. And bids were due back on January 9th, and 2 bids were received. The lowest responsible bidder came in over $1 million. The next one was approximately $1.5 million. So I worked to meet with our New York State DOT Director, Ross Farrell, and our Transportation Specialist, Beth Brown. I met with them on January 17th and advised of the procedure that was done and that I would be taking this to the council for award. However, at that time, they had advised that our ARPA funding would be cut. Therefore, that's a 40% decrease in federal funding. And unfortunately, then with the rates going up, that's a 26% increase. So it leaves a budget deficit of approximately $248,000. So I came up with some options in order to cut the service to try to get it within budget. I presented a couple of options to the Oates partners. We held that meeting on February 7th. Since that time, I had worked to cut some additional service. It would actually be proposing to cut the downtown circulator in its entirety. However, I was going to meet with the partners on February 28th, and I canceled that. I needed to seek guidance really from the council because there are other issues that have arisen during the past couple of fiscal years. The city's owed $486,200 in federal operating assistance. That's for the fiscal year 2022 to 2023. The city has also first instanced $555,004 for a current operating year that we're in 2023 to 2024. And then on top of it, the overall operating budget for 2023-2024 is approximately $850,000. So you're really first instancing that entire amount. In addition, we also first instanced approximately $458,000 for the purchase of 3 buses. We were just made whole on that on February 4th. There was approximately $18,000 that was withheld over some fiscal years, and they finally fixed that issue for us. And one thing I'd also like to know is the city took this service over in 2008. It was supposed to be done temporarily. It's since been 16 years that my office has been in charge of administering this, operating this, and coming before councils and trying to meet partner needs as well. And one thing I'd like to know, I've memorialized these items to the DOT and to Oates Partners. In addition, I've sought guidance and I've requested technical assistance from the New York State DOT with these issues and also in helping us to try to find someone else to sponsor the Oates. And they have asked for us to contact the county at a local level before they may be able to help us at a regional level.
questions or thoughts on this?
Just to let everybody know, we had a meeting today with the Senator's office, Senator Grove's office, and Senator Gilio's office about the past due amounts that they owe us. They're gonna see what they can do to expedite at least the 2022-23 $468,200 that is owed to the city. Just put it, we have already expended those funds, and that is money that would be in our fund balance. We had to pay it, we had to balance our budget, so we've taken that out of fund balance in that year, that budget year. So that is owed to us, and that's kind of a hard pill to swallow because it leaves us with a big gap. So.
Mr. Mayor, what are your thoughts on this as we move forward?
Well, I think my opinion is that this is something that put it point blank, we should get out of the bus business. This is beyond us. It's not just the city. The bus runs are going several places throughout the county, and we need to get another. We don't. The state needs to get somebody else to run this. I did send a letter to Jack Searles today stating that we're looking to get out of the bus, running sponsoring the votes for the transportation. And I have talked to two of our legislators so far, so we'll see where that goes. But this is not encouraging. We fund the money, and there again, like we're already $555,000 that's owed to us for the current budget that we probably won't see until well after the current budget closes and it's been audited. So that's going to leave us with another. By the time we close, it's probably going to be about $800,000. Carrie.
So I'll make up the other 300 and some odd thousand by doing quarterly reimbursements for the STOA. That's our saving grace out of the 850,000 that we're in right now.
Okay.
So the 555,000 is the federal transit operating assistance, 5311, that they withhold till you close out that current operating year, submit the annual report, and then I wish I could give a timeline when they would.
Yeah. As you can see, we're still here. It's 2024, and we still haven't got the money for 22-23 budget. So there doesn't seem to be any urgency from DOT to get these things resolved. And that's what we pointed. I'm sorry, Dave. That's what we pointed out to the senator in the Assemblyman's office today, that we need help in getting the reimbursements in a timely manner.
No, I'd just like to say, I agree with what the mayor just said, that the city should get out of the bus business. I believe we're going from Salamanca through Allegheny County plus around the city. And I don't think we should be in the bus business, especially at the tune of $500,000 that we're subsidizing. And I think the contract expires at Carrie, if I remember from the last meeting, it was June 1st. So I think we should direct Carrie, or ask Carrie, if the council agrees, to send a letter to whoever she has to, saying that the city is no longer interested in sponsoring this program and we want to get out and cease the contract on June 1st.
I just wanted to state that, to lose this type of program would hurt a lot of residents in the city of Olean. But at the same time, if we're going to use our fund balance year after year to try to subsidize what the government owes us, that's just not sustainable. We have to find a way of recouping our money, and at the same time try to seek assistance to try to find someone to take over this program. I think this program is needed in this region. I think it's been beneficial, but at the same time, like I said, the city of Olean, or the city residents, can't afford to pay for this program. So I agree with Dave. If this is something that is going to take more money from our fund balances, from the city of Olean, then we have to just look it in the eye and say, you know what, we can't do this anymore, and set a deadline and go ahead and stop the program.
Well, I agree with everyone's perspectives. The city of Olean is ultimately functioning as a bank in this perspective, right? We're fronting the money and not recouping a significant amount to the tune of $500,000 for well over a year. And to a small city like our own that has a limited fund balance, that certainly is material to our finances and our cash flows. So I agree. I think it makes certainly more sense to have major transportation that's now going throughout the county. It's not just a local city loop. To look to partner and have the county take it over. Allegheny County has a very successful transportation system, and possibly this system, which I agree with Alderman Robinson, is important to the residents of Olean, but it's also important to the residents of Allegheny and Portville and Hinsdale and Salamanca and so forth. So I think the other point that I want to bring up that no one's really mentioned is the amount of time and commitment that our really economic development office spends on managing the OATS program. And I don't necessarily see a transportation manager as a fundamental initiative under community development and economic development for the city. And I'm sure there's much better time and resources that can be spent on those ventures rather than buying buses, running buses, and so forth. So I think there should be, I think it's a successful program. I think if it can be restructured and have the proper transportation management system, and maybe it can be vibrant. The other thing too is that the county has a much larger sizable fund balance where cash flow maybe would be a little bit easier on them, and they could wait or work with the state to get better payment and better time. So I agree. I think this is a long time coming, and so I just would ask the mayor and Carrie keep us informed.
I would say, I think it's a much needed program, but I also agree that financially we can't afford to run it and, in essence, kind of let the state keep our money, interest-free that we've paid out. It makes sense for the county to take it over. I know when we've gotten the one budget, I looked at how much we expend, and I think monthly it was like $26,000 on the bus to Salamanca. And looking at that, and with our partners, and the reality is that it would appear that there's somewhat of a loss there in terms of how much money, the service given versus how much money is coming in there. So I would agree to look at the county. Hopefully they will see value in it and be willing to take it on. And I think, Mayor, thanks for reaching out to the senator and our assemblymen to try and get that assistance to get our money in not quite timely, but hopefully to get reimbursement. So anything else with that, Carrie?
No.
Mayor?
Thank you.
Okay, next on our agenda is the 2022-2023 fiscal year audit presentation. DWB.
Good evening. Good to see everyone. I'm Dave DeTana. Justin Eisman is here along with me. We're going to present your 2022-2023 audit. I think it's going to be our control man on the screens. Thanks, Lens. And so you've got really a couple documents in front of you. You've got the graph analysis, which is kind of a high-level document to kind of provide the highlights of the audit. So we're going to kind of
go through this a little bit, and then we're also going to refer to some of the information included in the audit report itself. Within this document, there's references to page numbers, and the page numbers are really in this document. Okay, so if there's any page that you're really, interested in, and you say, geez, I want to know more information about it, it'll have a little page number on the top and go to this big document. This is your audit report. Okay, so I'll kind of lead off. Go ahead, John.
Just for clarification.
Yes.
Dave, so this is preliminary. So does that mean there will be a final one
There
coming?
will be a final one coming. We don't anticipate any changes.
Okay.
So our goal is to kind of meet with you folks, and then I believe we have a representation letter that we usually get signed. Once we have that, we'll go ahead and issue it.
Thank you.
Yep, good question. Okay, so again, this is your audit report. This is your financial statements, okay? Our job is to provide reports that are included in here, and there really are three main reports, okay? First and foremost, the most important report included in this document is the independent audit report. That report is us, your audit firm, providing the city an opinion, okay? And that opinion is, are the numbers and all the disclosures that accompany your financial statements, are they fairly stated in all material respects in accordance with generally accepted accounting principles? Okay, so that's ultimately the goal of an independent audit, is for us to obtain documentation, obtain evidence, and then to provide this opinion as to whether or not the numbers and the disclosures are in accordance with the way they're supposed to be reported, in accordance with generally accepted accounting principles. So I'm pleased to report that we're providing an unmodified, clean opinion with no exceptions, and that's similar to what you've seen in the past as far as that independent audit report. Okay. So that's the first page, I think, of the graphs. Len, if you want to turn to page 3, as I mentioned, there's a couple other reports included in this document. Those reports are all related to internal controls and compliance, okay? And again, those are reports that are on our letterhead. We're required to provide those within your document. So basically, what is internal controls? Internal controls is your checks and balances system throughout the city. And then compliance is, are you complying with the laws and regulations that are prescribed for the city of Olean, okay? Our job, again, during the course of the audit, we're required, if we see anything that we consider to be a weakness in your controls that's either significant or material, to report that within this section of the audit, okay? And you'll notice on the screen and on page 4 of the graph analysis, we have 4 items that we consider to be a material weakness in your internal controls, okay? They're very similar to the comments that we've made in the past. I'd like to go through each one of those. And I always like to start off by saying, well, what is a material weakness? And what is a material weakness? So why is it a material weakness, okay? So basically, before I start with the definition of material weakness, you first have to know what the definition of a deficiency is. What's a deficiency in controls? And what the deficiency in controls is, it exists when the design or operation of a control does not allow management or the employees in the normal course of your business, the normal course of operations, to prevent or detect and correct misstatements on a timely basis. Okay, so that's a deficiency in controls. What we're reporting on is a material weakness. And so the definition of a material weakness is it's a deficiency, so it's what I just explained, or a combination of deficiencies in internal controls such that there is a reasonable possibility that a material misstatement of the city's financial statements will not be prevented or detected and corrected in a timely manner. Okay? So it basically says there could be errors that are significant within the financial information of the city. And that's what a material weakness is. And so controls are in place to try to detect and correct and prevent any weakness, any deficiencies or misstatements in your financial statements. So what I'd like to do is go through each of the four, similar to last year, and just summarize the comment, and then maybe talk about, like, why is it important? Why is that internal control important to the city? Okay? So the first comment we made, we talked a little bit about adjusting journal entries and disclosures to the financial statements. Okay? So during the course of the audit, we provide what's called adjusting journal entries. And for those of you that aren't accountants, you know, what does an adjusting journal entry mean? Well, that's a correction to either a balance or a transaction that we're making during the course of the audit. Okay? And then we also provide assistance in putting together this draft financial statements. So, you know, why is that an important internal control? Well, if we provide journal entries that are significant to the city, that means, you know, some of the information that you're getting to make decisions for during the course of the year, they might also need adjustments, but they're not really being made until when the audit's being completed. So the goal of having good internal controls with respect to journal entries is, you know, to prevent any misstatements that occur during the course of the year when the council receives information that you're using to make decisions. Okay? Any questions related to the first comment? Okay. Second comment. We've talked a little bit about this in the past. Reconciliation of general ledger capital projects. Really, it's kind of two-pronged. The first one is doing regular reconciliations of your assets and liabilities throughout the year. So that's kind of, you know, phase number one. Second phase is that you have a lot of capital projects individually. You have really one capital project fund, but individually you have approximately 60 individual capital project funds, okay? And throughout the year, those capital projects are kind of maintained within an Excel workbooks. So you have individual projects in individual workbooks, and ultimately that detail really has to match your level of accounting for your capital project as a whole. Okay, that's a pretty critical piece. And so an internal control is to make sure that those two agree on a regular basis throughout the year. Okay? Why is that important? You know, why is that important? So for the first situation, the reconciliations of assets and liabilities, if you're reconciling assets and liabilities throughout the year, that really reinforces that the revenue and the expenditures that are getting reported are accurate. Okay? So that's key number one. With respect to the capital projects, you know, having those two, the general ledger and also your individual capital projects reconcile on a regular basis, ensures that the capital projects are ultimately getting closed out the way they should be closed out. Okay, case in point, I think at the last council meeting, you had to make a resolution to amend a previous closing out of the capital projects. And this comment would alleviate that situation. Okay? Any questions on number two? Okay. Third comment. If you read through the capital project comment on page 79 and 80, you'll notice some wording that reflects the North Union project for 2017. Okay, so you might say, geez, that was in 2017, why is it included in our audit for 2023? Included in the comment, that was really related to the fact when the city had overruns on the North Union project, okay? And as a result of that, we came up with, you know, here's some internal control weaknesses that existed, and here's some recommendations that would alleviate the internal control weaknesses, okay? And there were like 4 suggestions we made. And during the course of 2017 until now, the city has adopted 3 of the 4 recommendations, okay? The one recommendation that hasn't been dealt with yet is that on budgeting for your capital projects, okay? Again, you have a significant number of capital projects. What the comment is saying is, you know, have a budget for how you're gonna fund the project and a budget on what it's gonna cost, and then to monitor that throughout the course of the capital project, and then report it to the council, okay? Why is that important? Again, you might say, North Union project, well, that's done. We've settled it. We've settled the lawsuits, completely resolved. This is an internal control. We're trying to ensure that that situation doesn't happen again in the future. And that recommendation would help with that. Okay? Lastly, we have a comment on bank reconciliations. During the course of the year, you do perform bank reconciliations on a monthly basis, okay? Where you take the bank statement and you kind of try to say, well, how many outstanding checks we have, how many deposits and transits we have, and so that's being done. The piece that's missing, though, is that that bank reconciliation does not agree to the cash that's being reported within your accounting system. Okay? Why is that important? Well, cash is the largest asset of the city. And so if your cash balance doesn't agree with what's included on the bank, that means that there's a chance there are transactions that are hitting the bank that aren't getting reflected within your accounting system, okay? Most significantly, in the past year, a lot of your receipts for your ambulance fees were not recognized within your accounting system. So they were received, they were included in the bank, but they never made it to your accounting system, okay? And so this is kind of saying what's included in your accounting system has to equal your bank reconciliation. And that process has to occur every single month. And if it doesn't balance, we got to figure out why before we move on to the next one. Okay, any questions? Yes.
So was there any recommendation for any specific procedure change in terms of ledger or anything that would help particularly this issue?
For the last one? No, I think it's, you know, you have a lot of transactions that go through the city, obviously, in various funds. You've got water fund, sewer fund, and general fund, the most significant. And there's a tremendous amount of activity, both in receipts and disbursements. And so it's just a matter of, you know, preparing the bank reconciliation, comparing it to your general ledger, and if there's a difference, trying to investigate, you know, what is creating that difference. And sometimes it means going through every single transaction. Was this, you know, here it's in the bank, can I see it within my accounting system? This is in my accounting system, did it hit the bank? And going back and forth, and you know, it sounds easy, but you have a lot of transactions. So there's a lot to it if there is a difference during the time when you're doing that bank reconciliation. Yep. Any other questions? Okay. I'm gonna turn it over to Justin, who's gonna walk through, you're gonna do the footnotes, a couple of footnotes, or you're gonna hit the numbers first?
Yeah, let's do the footnotes,
Okay.
actually. So if you want to open up the large document, we'll go to page, I think it is 36? No, 37, sorry. So at the top of 37, there's this footnote called interfund receivables, payables, and transactions. You know, we kind of think this is a good footnote for you to look at. This is essentially your due to, due from, your IOUs between the funds, and that's in the first column, those due from other funds and due to other funds. You'll notice that's $8 million right now. So in aggregate, they zero out. You know, every time one fund owes another, it's recorded, it nets to zero. But the big thing is the $8 million balance. That means maybe the capital project or the sewer, water, whoever is actually holding that IOU, they don't have the cash that belongs to them. So what's important about that, especially as interest rates with where they're at, is that you get that money in the right account, that these IOUs, these due to other funds, are kind of whittled down and the cash is in the correct spot, so that those funds are, you know, receiving their appropriate interest, you know, earnings. Especially with interest rates right now. You know, 5 years ago, it didn't matter really. It was, you know, you weren't getting interest anywhere. But with current interest rates, it's important to kind of monitor those and keep those down and keep the cash where it belongs. And then on the far right, that's your interfund revenue and interfund expenditures. So this is what you transferred amongst accounts. And then there's a narrative on what really is, you know, happening in those interfund transfers, and I think the narrative is a little more clear. That breaks out the first paragraph. Those are your interfund transfers related to debt. So whenever the general water, sewer, or capital has to send money over to the debt service to support debt payments. The second paragraph is capital related. So this is wherever you're moving funds into or out of the capital fund and who moved those funds. So, you know, you can see there what you moved from each of the respective funds into the capital accounts. And then the last one is just regarding the North Union. That's kind of a one-off situation, moving the monies from water and sewer into general. That typically doesn't happen. You know, most years if you went back and looked, it'd be those top two paragraphs talking about debt service requirements and capital. But, you know, that's an important footnote to look at. The next one we'll talk about is on the next page, page 38, litigation. So, you know, we have to disclose any pending litigation. So we do have a disclosure in there related to the Village of Allegheny dispute. So if you want to read through that, we've checked that with management, making sure it was accurate, but, you know, we do have that disclosed in there. And then page 39, you'll notice there's letter G, OATS, the Olean Area Transit System. We have that disclosed, actually exactly what Carrie was just talking about, that you guys are owed money. You know, there's a commitment, a contingency, an issue out there that should be disclosed to the reader of monies, significant monies that are owed.
Just on that point, go ahead, John.
Can I just ask a quick follow-up? So, back to the litigation, does that have an effect on the fund balance for that respective fund or not?
No, so that's why it should be disclosed rather than, so there's no actual liability recorded or anything, you know, recorded as of yet because it's still in pending, you know, legal decision. So it gets disclosed so that the reader kind of knows that, you know, something could be coming related to that.
But it does affect cash flow because according to this statement, correct?
Yeah, so I think to your point, maybe this also applies to the OATS situation as well. So with regards to the dispute, there's an amount that's been billed by the city.
Correct.
That hasn't been received, so there's an outstanding balance. That amount is not reflected as a receivable or revenue within your financial statements. Yeah. And the same for the OATS. That 480-something that Carrie referred to, that is not reflected as a receivable or as a revenue. You might ask why. You know, why isn't that included? And under governmental accounting, Really, the criteria for recording revenue is it measurable? So do we know how much we're gonna receive? And then is it available? Like, do we have it to pay our bills? And the fact, we're 9 months out and we still don't have the funds, no, it's not available. And so it's not recognized as revenue. Okay? And there's uncertainty with both of those items as well. And so neither of them are included in your revenue or your fund balance.
So it's not just a matter of the service has been performed, we get to report revenue.
Correct.
There's the added stipulation that the money has to be available,
Correct.
right?
Correct.
Mhm.
Yep.
So I'm not having some little confused here. So with this old situation, it's a thought carrier, somebody said that we paid, or we subsidized out of our surplus $486,000.
Correct.
So is there somewhere showing that we paid for the old service $486,000?
The expense is there,
The
but,
expense is reported.
but the reimbursement is not, because it has not been received yet.
Okay.
Yeah, so that's a good question. The expenditures are reflected, they're coming out of your fund balance, they're included as an expense, but that amount that you hope to receive is not reflected in the revenue.
So then that situation would drive a loss,
Yes.
correct?
Correct.
In both of these cases.
Yeah,
Yes.
I think the first case was really more related to the 21-22. I think the outstanding amount was very similar. If you looked at May of 22 versus May of 23, the amount was within $10,000. Yep.
And then the final footnote to discuss is on page 40, and it's called accumulated deficits. It's on the left-hand side. So these are your capital projects that are operating at a deficit currently, so they're in a negative fund balance position. The top three, those are ones that you wouldn't have to be too concerned with. We just footnote them. They have anticipated debt to them. So at some point in time, you're going to bond. That bond will be recognized as revenue that eliminates this deficit. It's the second group that is probably the more concerning to the council. Those are items that have gone over, they have a deficit, but as of right now, there's not really a plan or a revenue source to come in to offset it. There may be, anticipated revenues at some point in time, but, it's not recognized in that project that there's a ban attached to it, or there's a state receivable attached to it, anything like that. Any questions on that? Okay. So now, talk about your numbers real quick. If, Lindsay, you want to go to page 7? So the first part of your audit, starting at page 11, is called the government-wide. So this is essentially consolidated fund financial statements. It's got all of your basic funds grouped together. You can see here you have about $120 million in assets. Most of that is fixed assets, infrastructure. It's down a little bit this year because of the ERS pension. Last year, the ERS pension was actually an asset. It was overfunded. It was 101% funded. So you guys got a proportionate share of that overfunding, about $1.6 million. Well, this year it's back to being a liability, so it lowered that number slightly. Your liabilities and deferred inflows are down also. That's really driven by current bond payments. We had about $2 million in bond payments in the year, so that's really driving that decrease. The pension systems actually kind of netted on the balance sheet together because they have items called deferred inflows of resources that those two items offset each other. So really what's driving your liabilities is your bond activity. And then overall, your net position is $62 million for the government-wide, an increase of 1.9. So if we go to the next page, we'll kind of talk about that. So your expenses for your government-wide was $30 million. So what really, the biggest driver here was your pension. It's an increase of about $4 million. Of that $4 million, about $2.7 million are pension expense. So the pension expense, they have an actuary come in, they assign assumed rates to, make actuarial assumptions is what they call them, discount rates, things like that. And that actually increased from $600,000 last year to $3.3 million in expense this year. So $2.7 million increase on a paper number. It's not what you're paying each, quarter for your fireman's retirement or your ERS retirement. That is pure, getting this to comply with GASB standards. It's not your cash flows out. So it's a little deceiving, but it is a huge increase. And as those pensions ebb and flow, you're going to see ebbs and flows in your expenditures related to that. Your program revenue is about $16.9 million. You'll see it the last 2 years. It's been pretty consistently around that range. Really, since COVID, you've just had a little bit more going on that are reimbursable grants. Your capital grants in 2022 were $6 million. In 2023, there are $6.5 million. If you go back to 2021, there are only $1 million of capital grants. So that's really what's driving that deep increase from that light blue line to the purple and pink. Your general revenue is up slightly, not a little bit. It's really sales tax and real estate tax is driving that increase on the general revenue side. So then you can see your change in that position of 1.9 million. So that, overall, it looks positive, but when you really stop and think about it, you have $6 million of capital grants coming in. These are capital infrastructure grants, so they're not an expense on the government-wide statements. They go into fixed assets, your infrastructure, and then get depreciated. If you took those away, the last 2 years you would have actually been operating at quite a deficit without those monies being recognized as revenue and being built into fixed assets. So, it looks positive overall, but you have to remember that, the nature of those capital grants, it is a little bit tricky in the accounting and how it kind of creates this fund balance.
Is this also where the example of we're seeing the additional expenses flow through because from, say, the bus service, but we're not seeing any revenue side?
Yeah, correct. So, that would affect this as well. Every expenditure in all of your funds makes it into this consolidated fund. Every revenue in all your funds makes it into this consolidated fund. Now, the expenditures, the only difference is some expenditures are pulled out because they are added to your infrastructure, which you don't have building asset on your general fund. Well, in the government-wide statements, you do. Every time that you do work around the city that builds infrastructure, you're really adding to your fixed assets in a way. So that's what's driving that change. So not all expenses sometimes make it here. All revenues do though. But you have excess expenditures over revenues clearly.
So what about when we spend money, even if it's, I guess, through a grant, and maybe we don't get the grant right away, but we spend money to put $1 million into a runway at the airport? Does that show here under expenses?
So no, so that is added, the airport is added to your fixed assets as infrastructure improvements,
Yep.
but the grant then gets reported there under program revenue.
Okay.
So it's adding to your fund balance in your government-wide statements because it is, an asset, not an expense, but then revenue.
Okay. Thank you.
And it'll be depreciated and, over time it catches up, but, the hit when you do it, especially, this last couple of years when you have big projects going on, it does bump your fund balance and your net income for that time period. If you want to go to page 9 and 10, we'll start talking about your general fund, some more your day-to-day. Assets down slightly, it's mostly cash, offset by a slight increase in some state and federal receivables, but not a whole lot going on there. Your liabilities and deferred inflows of resources, that is up. That's your tax, deferred tax. So you start collecting tax in May. That's really related to the next year. So what that does is it goes into a deferred revenue account and sits there until June 1st, and then it gets brought into the next year's revenue. So that's what's driving that increase. You had more collections in May this year than the year before. Fund equity is at about $2.1 million. That was a $649,000 decrease. You can see on the next page, where the fund equity is. It's mostly you're unassigned. You did not have anything assigned for next year's budget. You had a balanced budget, and then your reserve for encumbrances was relatively minor, only $38,000 increase there. So those are monies that you want to spend out of this budget, but the goods couldn't be purchased for some reason, whether it was, you know, timing of orders or whatever, till the next year. But you're earmarking those. If you want to go to page 12, we'll talk about revenues. So you'll see here your revenues are up 559,000, 3%. You know, that is taxes and sales tax really is what's driving your increase. Those are the biggest increases. Those two alone are about 340,000 of the increase. Offsetting that, and you'll see it kind of down in the middle, they're smaller, but so they're harder to see, but your federal and state aid, that is down. A lot of that is the OATS money. You know, when COVID first hit, they supplemented, you know, a lot of the federal 511 money, 5311 money she was talking about, they supplemented that with COVID monies. Well, once COVID monies kind of ran out, that's when this issue with paying you the 5311 monies kind of came in. So that's where, you know, you're seeing a decrease there in revenue. If you want to go to page 13, your expenditures in the general fund. So the big difference here is public safety, salaries and benefits is up quite a bit, and you can see that's the second smaller bar graph over there. So overall, your expenses are up 679,000, 4%. About 600,000 of it is public safety salaries and benefits. So it's your police department, fire department, both of them.
What percentage of that did you say?
600,000 of the 679 increase. So, you know, a majority of it. I'm not sure what the exact percentage there is. So then if you will, the next page, you can see kind of a line graph of your fund balance with the lower in blue being your net income. So really, your fund balance right now is at 2.1 million. That's 12% of your budget for this year. So you have about 12% of your budget in fund balance now. You can see if you look at like the peak in 2021, you were at about 19% then. So it has dropped down over the years, and you know your budget's going up and that number's decreasing, so it's kind of double affecting it. You can see there your 649,000 at the bottom of income on the year. We do also provide that second chart. That's your capital transfers factored out. So those are more decisions by you to use fund equity for things. So as much as it does affect your bottom line at the end of the year, those were active decisions you made as a council to fund a project. So I think it is beneficial to pull it out and show you what it would look like without those as well. But they do affect your fund balance and your ending net income. Your water fund on the next page. So your cash is up here, but so is, you'll notice your liability line. This is one of the funds that probably has some due to other funds that could be moved. So it's holding the cash that really maybe belongs to another fund. So that's really what's driving both those lines there. Overall, you lost about 99,000 for the fund equity, so your equity ended at 4.7. On the next page, page 17.
Can I just stop you for a second for some clarification, please? Can you go back, please? So can you give an example of that? So when you said there's money in the liability side that we're sitting on cash that belongs to another fund, can you give an example of something like that?
So let's say, you know, for water and sewer, it happens quite often. So when water and sewer deposits come in, most of it is deposited in the water fund, especially the credit card transactions, things like that, because just the way the bank wants to deal with it. They don't want to wire into two different accounts and split the deposit for you. So they wire it all into the water fund. So then it's just a matter of going through those receipts on a monthly basis and making sure you're moving that money over to the sewer fund, because it's half of that, a good portion of it, is really sewer fund revenue, where the cash is sitting in the water fund, and so there's cash in the water fund, but it's due to the sewer fund. You know, so it's situations like that. It also happens when debt comes in. That's also another driver that impacts it, and that's often very large numbers. So, you know, the money will go into the debt service fund, but it maybe is owed to the capital in some way. You know, it's really 5 or 6 capital projects are why you banned for that money. And, you know, but the cash is sitting in the debt service. Really, it probably the cash should be moved over to capital. So not only is the cash there to spend, you know, I mean, I think the way it's been done here is as expenditures come due, you make transfers over to pay it out of the debt service. Really, the cash should probably be moved the minute that ban comes in to the respective projects, so that not only does that project have the cash to spend, it also is earning that interest.
Okay, thank you.
So just to your point, John, so as of May of '23, the water fund held about 1.2 million in cash, and they had a net due from, the net's due to of about 1.7 million. So there was amounts due to other funds. So really that cash that's sitting in the water fund isn't really the water funds. And as Justin mentioned, prior to this past year, again, you've done a nice job at putting some money aside and getting good interest rates. Prior to this year, the interest rate was 0.1%. So that cash sitting there really didn't have any impact. It, should be in the right spot, but it really didn't have any impact on your bottom line. Now that the interest rates, you're obtaining interest on that cash, it's probably another fund's cash. And so the fund that really the cash belongs to isn't recouping the interest that really it should. Okay.
So that's showing up as both an asset and a liability then?
Yeah, so both offsetting
Right,
are
so
there.
they're offsetting, but
Yep.
that really just, so is that an example of like one of the adjusting entries that you're talking about? One of many different types of adjusting entries that has to get done is moving.
Yeah, because the other thing and a lot of the adjusting entries eventually come down to those due funds and making sure they balance, because at the end of the day, they're all IOUs. So every time the general fund owes another fund $10, both funds should have that. That's a lot of what I spend my time on in terms of the entries, is making sure those and the interfund revenues and expenditures we're balancing.
Thank you.
So then, Lens, if you want to go to page 17, so overall you had a $139,000 increase in the water fund, 4%. It's really a flat actually when you look at your actual water receivable or water payable payments. The increase there, 139. When you closed out capital projects, there were a couple capital projects that had funds left over and moved funds from the capital. I think it was mainly the wastewater plant, capital project 163, moved about 140 over to the water fund. Well, without that 140 transfer from the capital, we were really about even in terms of revenue in the water fund. Which I believe you did increase rates, so that really means usage of stuff. That's what that tells you. Next page, page 18, you had a $70,000 increase in expenditures. Most of it was your debt service requirements. As usually the bonds have escalating payments, so what was required from the debt service was just more this year than the prior year. And you can see that down below. And the operating transfers out. So then the next page, you can kind of see the trend here. You've been kind of whittling away at that fund equity over 5 years. Starting you were at 915 in 2018, now you're down to 427. That's about 10% of the budget over there in the water fund. So you're getting kind of lower there. You've lost, over the last 3 years, about $350,000 if you add those up. So the water fund is losing money, and there's a trend there for fund equity that you're starting to run close to your equity levels.
Would that be because of the possible litigation value that's causing this loss?
Some of it, yes, because that wouldn't be recorded as revenue, we don't think it's recognized yet, but not all of it. There's more to that than just that as well.
Yeah, I don't know if the mayor has the numbers, but I think we need to look at usage. I think you've mentioned, even though we've increased rates, I think a better question is usage, especially from some of the large industries. A place like Dresser Rand isn't using that level of water anymore. So we maybe during the budget need to take a look at that. Yeah.
So then we'll talk about sewer next. So in the sewer fund, you'll see here it's a little more consistent. The cash and liabilities, cash is down a couple $100,000. There's some small changes in equity revenue flows, nothing big. And then overall, another $99,000 decrease actually for the sewer fund. So if you go to the next page, there's a $181,000 decrease in collection. So the sewer and water kind of go hand in hand with the usages. So that's, the sewer didn't get a transfer in from the capital. So this is what we saw in the sewer without that transfer is really this decrease in revenues of $181,000.
Now, because currently with the litigation with the village, we provide them sewer
Yeah.
services, correct? Not water.
Yeah,
Is
so,
that right?
so this is where the revenue would be.
This could be driving.
Yeah, and
revenue.
right now you're owed, I think it was 250, I think is the estimate, somewhere in that range, as of May 31st. I think now you're probably owed more,
Right.
but as of what we were auditing, it was about 250. That could be factored in there.
Thank you.
Expenditures in the sewer fund increased about $223,000. So again, it's really debt service requirements. As those escalating payments go up, your debt service requirements from each fund went up. And then also you actually transfer a little bit more out of the sewer fund towards the capital than you did in the water fund, so that also negatively impacted the expenditures here. And you can see that in the lines down below. The debt service, the two operating transfer out lines at the very bottom right were the two increases, the transfers to capital and transfers to debt service. So then if you go to the next slide, so this fund balance is a little more healthy, but it is also, that decrease of $400,000 over the last few years is pretty similar actually to what the water saw as a number of a decrease, $400,000, but it, doesn't look as impactful on this chart because there's just more equity over there. But you're down to about 1.9 million, and that is 46% of your budget, so it's a lot healthier in the sewer fund. And then you can see the line down below, as it goes, the blue line is without the transfers. And you have that jump in 2022 and that big loss in 2021. And I think it's important to recognize that's when the issue with the village of Allegheny began. So 2021, we had a big receivable on the books, and we got to the audit, and we got to this time period and said, they still haven't paid you, we can't recognize that as revenue, and we pulled it out. So you lost a lot of money in 2021. Well then, 2022 really got the bump when they started paying some, because they really, 2022 collected some of 2021's revenue. As the cash came in, it was being recognized as revenue. But again, we're, down to getting owed money, so that's where the 99 is.
Where does that get pulled out to? Is there like a bad debt account? Where does that?
So yeah, there is a bad debt account, but I think historically what we've done for the audit is just written down the actual receivable. So if the receivable was at 500,000, we brought it down to 250, whatever was actually recognized and received between May 31st and usually, sometime in the early fall. If they paid anything in that period, we'd allow that to be a receivable and recognized, and anything past that point, we really said it's too far out to be included in the revenue.
Thank you.
So then, if you want to go to the next page. So then also, Dave talked about findings. We also have what's called the management letter. So these are lists of kind of best practices things. Sometimes it's also a warning of a new GASB that's coming that you're going to have to anticipate. Tech guys are going to love hearing about H. So, A through G are pretty similar things we've said in prior years. Having a plan for debt service reserves, getting a fixed asset appraisal done. Yeah, it's been a number of years since you've had a full appraisal. Those type of things, they're similar comments in prior years, just, it's something to consider. Letters H, I, and J, I think are important enough. They're either new or we should talk about them. H is GASB 96. It's a new GASB that will affect next year's audit. What it is it's looking at software agreements, and if they're long-term in nature, if there's any impact that they should be recognized almost like a lease. So, what really we're seeing a lot of is hopefully they're not long-term in nature, or the agreements are immaterial that maybe it could be passed on, but really there's some legwork on Lens and the tech department to go through the software and try to figure out, what agreements do we have out there that could fall under this, just to make sure you're in compliance and there's something you're not thinking of that you're paying a monthly fee for, but you're not recognizing it under DASB 96.
It's not making you capitalize it, is it?
You'd capitalize it, but you'd have an asset though. You'd have also a right to use asset. So really, income statement impact, pretty minor.
Yeah.
It's really just the change in the discount rate between what you're amortizing from that right of use asset and the liability. But there is, an asset and a liability to it. And this is, going back to the water and sewer, we were talking about usages and getting those numbers. So for our audits, there've been some issues. I think it was 3 years ago. It was actually pretty major. But the last couple of years, there have been minor ones where maybe a month is off. So they provide us nice spreadsheets with the usages on them. And I think at least 1 month out of the last 3 years, each time we've done the audit, 1 month something went wrong where the usages they didn't have the number. And that can be problematic, especially when you're trying to analyze, how is your usage, what's going on. So we're not really sure what's causing that. Talking to the water department, we're not sure why that's happening and why the data is kind of lost. But that's it's important to have that data. So we're bringing that up just to something to look into. And then the general fund budget. So this, I mentioned you had small encumbrances. You didn't have much, but the issue with we allowed you to have those encumbrances. We didn't pull them out of your reserves, but you didn't have budget left. So individually, maybe Carrie's department encumbered for something, and they had a budget line left that they could encumber funds from. And they probably looked at it as a department head. They're in the right. We have funds to use to spend, but overall aggregate, the city was over budget. So really, they probably shouldn't have been able to spend any monies. You exceeded your budget, really, especially. So the idea that you exceeded your budget and then you also have the reserve for encumbrances is it looks, questionable. So not only at the end of the year when people start sending in budget requests to encumber amounts, you should look at each individual budget line to make sure it's within budget. But he also needs to look at the budget in totality to make sure you're not over budget. Because maybe the fire department thinks they have fund balance left over that they were budgeted to spend, and they want to encumber for something. But if the police department went over budget, it kind of takes it to a level where they may not be able to spend those funds as much as their individual budget line looks like it.
Total was about 50,000.
Yeah, it's
Right,
about
50,000.
Yeah.
Just
So
under
as an
50,000.
aggregate, we went over the budget 50,000.
Yep. Yeah, 42,000. 42,000.
So, 42,000 is a lot, but it's not, right?
No, as far as budgeting, you guys are pretty close.
Right.
And we understand how it happened. Obviously some department had they had some fund balance left over. But from a compliance standpoint, you really probably should.
How do we address that going forward?
As I said, when Lens gets those encumbrances, he really should check it in total just to make sure, hey, are we, and then, you guys, it should be brought to you to say, hey, guess what, we're gonna be 40,000 over budget, these groups wanna encumber 30,000, so that's gonna throw us 70 grand over budget. Are you okay with that as a council? That's really probably what should happen. Good, and you notice it's in the management letter, it's not under compliance findings, because it wasn't that material, as John said.
Okay. Any other questions? All right. Well, thank you very much.
Thank you.
Have a good meeting.
Sorry.
always there.
Isn't that what this is, Lynn?
I'm gonna get one copies, do you want one copy?
Changes.
They put it in there on top.
Yeah, if there's no,
Preliminary statement.
if there's any change, give me that. If not, I'm good. Preliminary works for me. Yeah.
Well, I mean, they will send me a soft copy anyway, so if anybody needs it, I can send it to you guys.
We would just ask if there's any material changes.
No one needs
So let us
changes.
know.
No one needs prints.
Yep,
Just
just
you know,
any
they'll
change.
send you a PDF copy.
Yeah, it will.
And just at the very least, you can forward that to us.
Final copy.
Okay.
Hard copy.
I will request them tomorrow, please, if I can find it.
Okay, last on the budget for finance, or for finances, the 2024-2025 budget discussion. And here, we were thinking of kind of laying out kind of the plan for the budget discussions. And Mayor, do you want to?
Yeah, I've been talking with Sonia, been going back and forth, and we put together a calendar that we would start the actual discussions on the 11th, that's Monday the 11th. And then, did you want to do them after regular council meeting too, or you just want to do them on committee nights?
Right, we said to put it on both, and then we would know by Friday of the week prior how heavy the meeting schedule was. And if we needed to, then we could, that would give department heads time and stuff if we needed to cancel because we were really heavy.
Yeah, so you're talking about on the regular meeting night, if it looks like a short agenda for the regular meeting, then we could schedule to have some department head presentations. Is that-
So, so just kind of leave it that Monday, Tuesday.
Right now it is a.
Honestly, on any of the nights, even if committee work looks like it's really loaded up.
Yep.
Cancel
It's-
that on Friday.
Yeah, it's on both.
Yeah.
Yeah, right now, the Tuesday agenda, the regular meeting is very, very light, nothing we haven't talked about before.
Yep.
I'll move Thursday.
I think that's good.
It would be the 11th, 12th, 18th, 19th, 25th, 26th. Why didn't I do Monday the 1st? I can't remember.
It's April Fool's Day.
I don't know.
I think that's okay. So, April 1st, Tuesday, April 2nd.
Are you wait a minute, Bill, because Sunday's Easter, so are you guys closed on Monday?
Maybe that's why I did that.
Because the 31st is Easter Sunday, so I don't know if the city's closed on it.
What's that? No, yeah, we get Friday off.
And then
We
the
get
Friday
Monday
prior?
off. Just Friday,
Just Friday.
just Friday.
Yeah, well, we're far enough out,
Yeah.
we can tentatively plan on that. And then the 2nd, the 8th, the 9th, we have to have it passed by the 15th of April.
And our goal is to be done sooner. And part of the strategy that we talked about is to not require line by line by line review by the department heads. John and I had also spoke, that if it's, unless it's something new that they're putting in, but if it's, 1,000 or less, that we really don't need to review that change. If they're moving something from one line to another, just kind of appraise us of that. And the other thing is, looking to see what time frame so that department heads don't have to sit hours sometimes waiting for their turn. So if we can kind of sit to a time frame for each one of the department heads, for the larger departments, we might need an hour, and the mayor can work with his department heads and say, it might be that Parks and Rec, maybe we only need 30 minutes or something. And then the one thing I would ask the council is, as we go through and we look at the budget, if we have significant questions, if we get them out to the department heads ahead of time, then they can be prepared. And we've also asked that department heads come in, if they're making any significant changes, like I know there's a couple positions kind of out there, that they come in with their supporting documentation, and that will decrease the time they have to come before us, and we'll hopefully get through the budget a little bit quicker. So I guess I would ask, if you guys are looking through the budget and you see questions ahead of time, make sure that you get them out, and maybe we even want to say, you know, maybe put a repository in once a week, we can send them out, however it's going to work, and we can figure that out, so that if there's questions that we don't get mired down in the minutia, if you will, but we can focus on the things that are significant changes. Any other thoughts, comments on the budget process?
Are those times 6 o'clock for Monday?
6 o'clock?
6 Monday, okay.
I think that we had said that worked for everyone in their check, so. Okay, any,
So I just, Mayor, is the mayor's office providing pizza this year, or is it the council's?
oh, I don't think it's our year.
I think it,
Sounds like a celebration going on.
I think Adam was trying to provide it. See what we can do.
Yeah, we'll figure something out. We'll try to keep everybody's brain power, we'll try to figure something out.
Yes, I
all
don't
right?
know if I have a
But,
snack basket this year, so I'll
I
have to
know.
work on it.
I'm not coming.
We got some good snack, you're not.
I'll
doing
have
it?
to work,
You say
no, I
you're
said I don't have one prepared already, I'll
Oh,
have to work on it.
We'll put our heads
That's
together
our budget.
on that, but, yeah, I would encourage, Sonia, you hit it on the head, you nailed it, and I think, you know, materiality is the key to make this go efficient. And I want to encourage that as far as on behalf of the council as well. You know, if you have questions, we're not in the business of trying to do the aha moment. So if there's anything that you come across ahead of time, shoot, you know, a question to the department head, something that can get resolved quickly, you know, and let's just focus on major changes, major strategic changes and plan. So, yeah, looking forward to the upcoming presentations.
Just for scheduling purposes, how, I think last year we went a couple of hours. I don't know if we went past 8 o'clock very much, but.
Our goal would be not to. I think last year we did a couple of times, and so hopefully with streamlining and not going line by line, that we'll be able to, I agree, like
Just so I know,
2 hours.
the department has to
Yeah.
have come, like on the 11th,
Mhm.
based on approximately 2 hours.
Yes.
Yes,
I think that's good. Yeah,
yeah.
Okay.
yeah, let's try to
All
keep
right,
it to
so
that.
I'll set that up for 2 hours, and have the different department heads there. I'll only schedule probably 2 or 3 for that night, so,
I think that's good.
okay?
Okay.
So, the only thing I'd like to add is, the budget is coming in at 4%. It's a lot better than last year, 6%. But when the council has to vote to override the 2% tax cap, I said last year that I hope that it doesn't set a precedent that this would happen every year, that we're going to have to override the tax cap. So it would be a nice surprise if maybe before we start meeting with these department heads next week, that maybe they could come in and surprise us. To bring that down to 2% is only about $142,000 cuts out of the entire $29.46 million budget. So it would be nice if maybe the department heads would go back to look at their budgets before they come to our presentations. It maybe surprise us and have a little cut. If each department cuts something, we could get that down to probably the 2% very easy without having to override that tax cap.
Thank you, as always, for being fiscally responsible. No, I appreciate that, and I think that, you know, and we were, you know,
Sonia, if I may,
yes,
I mean, we just saw the presentation from BWB. From 2018 to now, we see how our fund balances keep going down and down. I don't think
We're the same.
saying that 2% is gonna do us any favor, because we need to bring those fund balance back up for all 3 funds, general fund, water, and sewer. We have to bring them back up at some point.
No, I didn't say anything about the fund balance. I didn't say take anything
Well,
out of the
that's
fund
what
balance. I
I'm
said,
saying.
that's what you've heard, guys. Cut their proposals before they come to us.
This is conversation, that's right, during budget talks.
okay. Committee reports, none. I'll take a motion, I'll motion to adjourn.
Second.
We'll give it to President Crawford there. All in favor? Opposed? Okay, works.
So, we'll move on. So I'll call to order the Youth and Recreation Committee meeting Tuesday, March 5th at 7:15 PM. Please note that all aldermen are present except for Alderman Panis. So just need an approval of the minutes for the previous committee meeting of Tuesday, February 20th, 2024. Make a motion. Thank you.
Second.
Thank you. All right, unfinished business, letter A, Marcus Park bleachers, we've already, discussed that, that move will go to Forness, so that's great. I kept the Forness field changes on here, cause I know, we're going through the budget season, and softball season starts in May, and May will be here before we know it, and I know there's some work that has to be done, with the lights and field 10, and so I just wanna keep it on the radar, and make sure that, you know, I know the mayor said we're still getting costs, but, you know, making sure we're keeping that on the radar, getting those costs, and have, I'm sure I'll be asked when that might be available, if before the season, or so just to be able to provide updates for them for timeframes. I don't know if you have anything to add, Mayor.
Just, the lights on 8 and 9 is priority, get them up first. And then, field, that'll give them more playing on those fields. So 10 is we're discussing it, engineering's mapping it out, moving the backstop up. And,
Back.
I've had a couple of conversations with Don Bearfield, and it's on the radar to do.
Okay, and it would be moving the backstop back,
Out towards the.
or up, okay, out, okay, perfect.
But there's, there's gonna be a cost involved, so we're
Right.
working on that now, so.
Okay, perfect, thank you. And then, new referrals for consideration, we are, going back to our friend shot, cleanup and mural painting, so the artist is willing to do the mural, that we were gonna do last year, but got rained out several times and then he wasn't available. The mayor and I spoke, along with the artists, so we're thinking Earth Day is April 22nd. So, we'd love to get volunteers that weekend before to get cleanup going on. I know he's reached out, or will be reaching out to the Boy Scouts, troops to see if they're available. I will put a call out to like volunteers from the ward if anyone's interested in coming down and helping. And then, so hopefully the cleanup and the mural can happen that weekend before Earth Day. I think a rain date, I was thinking the following weekend, if we had a couple, I don't know what's going on in the world at that date after, the 27th and 28th. So,
I'll have to check with the artist.
yeah, I can email him too if you
All right.
want me to
That's
take care of
fine.
it. And also, Marcia, how do you say that?
Vandella.
Nandella. She does landscaping at the Bartlett, and so she's offered, she had some landscaping ideas for Nandella, yeah. She has some ideas for landscaping at Franchot, and I'm actually meeting with her tomorrow afternoon hopefully down at the park, it's not raining, to see, what we can do. So again, an effort to give that park like facelift and really spruce it up and encourage, as we come into the spring and the summer, for our families to have a clean and safe and beautiful place to go and play and gather, so, yeah.
So Is this something we could put maybe a flyer together and then we could put it on the city website and I would be happy to post it on my Alderman page and on Facebook and other social medias. So maybe we can get some more help there.
Wherever we can get it out.
Perfect.
Yeah, absolutely. Yeah, so I don't know who makes flyers, but yes, you can do that, or I'm gonna make one. Yeah, and just get it out so we can get people down there. And, I know we have nice weather now and it's supposed to snow later, but spring will be here before we know it. And people, there's tons of people down there. Today I was out walking around, down there and, just the kids in the street and over at the park and so. Any other questions?
Jen,
Yeah.
just to add on to next time can we put Oak Hill Park on, not to talk about it now, but the side facing 4th Street, just so we get that back on the agenda.
Put whatever you want on it.
Listen, we don't want me out there with the weed whacker again, so, yeah, if we could put that on for the next meeting.
There's no weeds out there now.
Well, that's
Can you make a note of that? Okay, I'll write it down, but, any other questions or? Yeah, so I would just appreciate when that comes out, if anyone can just share it, that would be great. Any other ideas you have for that? Appreciate it. All right, committee reports, there are none. So motion to adjourn?
I motion.
Thank you. Second?